Alright, let's get right to it. If you are a project developer or a business owner trying to get a big idea off the ground, you know the biggest hurdle is money. Securing financing is the name of the game. You need to show lenders and investors that you are a good bet, that their money is safe with you. This isn't just about having a great plan, it's about having the right financial tools in your toolbox to build trust and confidence. You need instruments that are not just powerful but also smart and efficient. You cannot afford to waste time or money on complicated, expensive bank paperwork that slows you down. For years, people have automatically turned to things like a standby letter of credit or a bank guarantee. And yes, those can work. But are they the smartest choice for you? Are they the most affordable choice? Not always. Today, on June 15th, 2025, I am telling you there is another way. A way that can be simpler, faster, and leave more money in your pocket. It's a tool that strong, credible companies can use to unlock the funding they need without all the usual headaches. It's time to stop doing what everyone else does and start doing what is best for your financial future. This powerful tool is called an Avalize promissory note. I know it sounds fancy, but I want you to listen closely. This is one of the most direct and powerful ways to secure a promise of payment. Think of it as a financial power move. It's about being approved, denied, or, in this case, guaranteed. When you get a bank to avalize your company's promise to pay, you are telling the world that your promise is backed by the full faith and credit of a financial institution. This stamp of approval can be the key that unlocks the door to the project financing you've been fighting so hard to get. So I want you to sit up and pay attention. We are going to break down what this is, how it works, and why it could be a game changer for your project. Forget what you think you know about bank guarantees. It's time for a financial truth talk. We will look at the good, the bad, and the undeniable financial benefits. This isn't just theory, this is practical, real-world advice that can save you thousands, even tens of thousands of dollars. Let's get smart about how you finance your dreams. Your financial dignity depends on making informed choices, and this is one you need to know about. So, what in the world is an Avalize promissory note? Let's break it down. A regular promissory note is a simple written promise. It's an IOU from one party to another saying, I promise to pay you this amount of money on this date. It's straightforward. But an IOU from a company, even a good one, still carries risk for the lender. How do they know you'll be able to pay when the time comes? This is where the aval comes in. The aval is a special kind of guarantee provided by a bank, stamped directly onto the promissory note itself. It's the bank saying, we stand behind this promise. If this company cannot pay you, we will. This is fundamentally different from a standby letter of credit or a bank guarantee. Those instruments are separate, often complex, multi-page documents. They are issued by a bank and sent to the beneficiary, usually through the SWIFT messaging system, which is a network banks use to communicate securely. This process involves multiple steps, multiple documents, and, you guessed it, multiple fees. The SBLC or BG acts as a separate safety net. The Avalized promissory note, however, integrates the promise and the guarantee into one single powerful document. The guarantee is not adjacent to the promise, it is part of it. The magic is in that bank stamp and signature on the note. This act of stamping is called the aval. The bank that provides it is called the avalizer. By doing this, the bank becomes a co-signer, equally obligated to pay the debt if the original promisor, your company, defaults. This makes the promissory note a highly secure and easily transferable asset. A lender holding this note knows they have a rock-solid claim, backed by a bank's balance sheet. It transforms a simple corporate IOU into a bank-guaranteed financial instrument, without the cumbersome paperwork of other guarantees. Think of it like this: an SBLC is like buying a separate insurance policy for a loan, an aval is like having a billionaire co-sign your loan application directly. Both can get the job done, but one is a lot cleaner and more direct. The aval is a declaration of unconditional support from the bank. It doesn't have a lot of fine print or conditions, it simply says this note will be paid. This simplicity and strength are what make it so appealing for project financing, where clarity and certainty are worth their weight in gold. Now for the part you've been waiting for. Why should you care? Because an Avalize promissory note can save you serious money. Let's talk numbers. The fees for issuing a standby letter of credit or bank guarantee can be significant, often ranging from 1 to 4% of the face value per year. On a multi-million-dollar project, that adds up fast. Avalize promissory notes are almost always less expensive. The fee for the aval is typically lower because the administrative work for the bank is much simpler. We are talking about one stamp on one page, not a complex legal document. And here's another huge money saver: an Avalize promissory note completely avoids SWIFT fees. Because the physical note with the bank's aval on it is the guarantee itself, it is delivered directly to the lender or beneficiary. There is no need to send messages back and forth through the expensive SWIFT network. Each one of those messages costs money, and for complex transactions, the fees can pile up. By using a physical instrument, you cut out that entire layer of cost. This is a smart strategic move to reduce your project's overhead and keep more capital for what really matters. Furthermore, banks often require less collateral for an aval than for an SBLC. Why? Because banks typically only offer avals to their most trusted, creditworthy clients. They are guaranteeing companies they already know have strong financials and a solid track record. Because the bank's risk assessment is based on a deep existing relationship, they may be more flexible on collateral requirements. For you, the developer, this means you don't have to tie up as much of your cash or assets to secure the financing you need. This frees up your capital for other critical parts of your business. The beauty of this instrument is its simplicity. It is a single-page document. It contains the promise to pay, the amount, the date, and the bank's unconditional guarantee. That's it. There are no complicated clauses to interpret, no lengthy terms and conditions to negotiate. This simplicity translates into speed. Deals can be closed faster, funding can be released sooner. In the world of project development, time is money. Delays cost a fortune. Using a tool that is clean, clear, and quick gives you a powerful competitive advantage. The honest truth. Okay, I have told you how great this is, but I have to be your financial truth teller. An aval is not for everyone. The biggest trade-off is its exclusivity. Banks are very careful about who they give an aval to. They are putting their own name and money on the line in a very direct way. Therefore, they only offer this service to companies with a strong balance sheet, excellent credit history, and a long-standing positive relationship with the bank. If you are a new startup with no track record, you will be denied. This is a tool for established, financially sound businesses. Another challenge is awareness. You might walk into your bank and ask for an aval, and the banker might just stare at you with a blank expression. I'm not kidding. While common in international trade finance, especially in Europe, many domestic bankers in other parts of the world are simply not familiar with them. They are trained on SBLCs and BGs, and that is what they know. You may have to be persistent. You may have to educate them or ask to speak with someone in the trade finance department who is more likely to have experience with this kind of instrument. So here is your action plan. First, do your homework. Get your company's financial house in perfect order. Then, approach your bank. Do not just ask for a project loan, ask specifically about their willingness to provide an aval on your company's promissory note. Be prepared to explain why you are asking for it. Compare the potential fees for an aval against a quote for a traditional SBLC. The savings could be substantial, giving you a strong case to make. If they are hesitant, be patient but firm. Your job is to be the CEO of your own financial life. In the end, for the right company, an Avalize promissory note is an incredibly powerful and efficient tool. It can streamline your financing process, lower your costs, and help you secure the funding you need to bring your project to life. It is a testament to your company's strength and credibility, so do not be discouraged if you face some initial resistance. The path to financial success is often about finding smarter, not just harder ways to work. This is one of those smarter ways. You owe it to your project and to your future to explore it. Discuss your requirements with Jabu.